Okay, to help us close out the show, we're going to John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve-O, thanks. We're collaborating here together for your listeners in Tiger TV and the Tiger's Den. You're showing the weekly chart of the 30-year U.S. Treasury Bond yield.
Yes.
And I just care to share with you a trading rule that I'm working with right as we speak, namely back on the week of Monday, October 1st, when I was shorting bond futures. We had a breakout in yield over 325, 3.25, nice round number.
Yes.
3.25 is the high from 2015, 2017, and earlier this year, 2018. And
right.
That is the Fib 618 resistance mark if you measure back up to the high 2013 at 4 even.
Yeah.
Steve, with this is a classic Tommy O'Brien go to ice and jump the creek. And that creek is 3.25 yield, so incredibly well-defined. And what I'll tell you is the likes of Double Line Asset Management out in Los Angeles with just a boatload of money under management and one of the better bond managers around, they had been looking at this level and saying, if we want to buy bonds, short the yield against 325, but if we get over that is a regime change, if you will, and yields will head higher on a sustained basis. Therein lies my rationale for shorting the bonds. Tried it last Friday, and I've done it again today. And it's this dip in the yield that's dipped away from 345 towards 3.25. The speculation is 3.25 is now the floor for yields, and now yields march higher without dropping back down much.
Yes.
So I just wanted to share that with you in that chart you show.
I appreciate that, and I see that. I appreciate that. I see that. I know it. I also know that when you break out above a long-term resistance area like this, you can come back and retest it just to prove it. So that's where that other side of that bond trade. But we got like 5 seconds to close it up. I apologize, but your observation is exactly right, and I want to thank you for sharing that with all of our viewers out there.